Fact that you can get $1 million worth of primary care, primary liability coverage at $367 in today's market.
Hey everyone, and welcome back to the HOA Simplified Podcast. Today we have Brian Berg from Brian Berg Insurance Services, and we're going to explore the topic of HOA insurance, how it concerns to their HOA, and some of the legal aspects of insurance. So again, as always, we have a list of questions prepared that are directly from the communities and the HOAs. And Brian is here to go over these questions, discuss the specifics of HOA commercial insurance. So before we jump in, Brian, welcome. Thank you so much for being here, and give yourself a quick introduction to our viewers.
Yeah, thank you very much, Neil. I definitely appreciate the opportunity. I know it's not the most riveting of subjects to discuss, but it is something that's hugely important, especially given today's insurance climate and everything else that seems to be taking place throughout the industry. Come from a long line. My dad started his agency in 1972. I started out working for him when I was 16 with my Polaroid camera and Thomas guides, doing property inspections and trying to make sure I didn't get myself lost while I was driving from Orange County to LA to San Diego to the Inland Empire. And I frequently failed at not getting lost, but at the same time learned quite a lot about the industry. I got my license in 2000, started my own shop in 2003, and opened up our Vegas office in 2007. We've just been trucking along strong.
Awesome, awesome. And you mainly do insurance services in California, right?
We are California and Nevada based, but the majority of our book is in California, and we are solely HOA.
Awesome, awesome. Solely HOA. I love that. And it's very important. Insurance service for HOAs are very important. And as you know, Brian, a lot of our viewers are self-managed communities. A lot of them are small communities, and insurance is an important aspect where people really need to know the ins and outs to be able to fully understand what is going on. So I guess the first question is a super basic question that a lot of folks ask is what insurance policies do HOAs typically require, and for those specific policies, what do they really entail?
I mean, usually HOAs are going to be required to carry property, general liability, directors and officers, and fidelity bond. There are also alternate policies that are not necessarily required, but are highly advised. One of which specifically is workers' compensation coverage.
Hmm.
Work comp, people think of it and they say, hey, look, we've got 6 units, we've got 20 units, we've got 50 units. Even associations that have 150, 200 to 1,000 units say, we have no direct employees. Why do we need the workers' compensation coverage? And when you break it down, you think about it in that fashion, it makes sense, except for the fact that you can get $1 million worth of primary care, primary liability coverage at $367 in today's market, regardless of how many units the association is. And your need to have that is in place in the event that one of your subcontractors becomes insolvent, or one of your subcontractors is injured on the job and their work comp policy declines it. You could have provided a million plus the additional umbrella coverage for $367.
Hmm.
Seems to be a no-brainer at that point.
Right.
The other lines of coverage that are not necessarily required would be flood, unless you're in a dedicated flood zone, and then earthquake, which is not required in almost any set of CCNRs that I've ever seen. I mean, we've only seen a handful out of the 1,000 associations that we've worked with, where they've said that there's a requirement of earthquake coverage, and those are high rises that are in a high fault zone.
Right. Right.
But as far as that goes, prop, GL, Dino, Fidelity,
Hmm.
the umbrella gets you back up to the Davis-Stirling Act interpretation of minimum limits, and those are your requirements.
Okay, awesome. Awesome. And as an insurance company, how do you kind of evaluate whether or not an HOA is overinsured or underinsured? I mean, for a lot of the self-managed and small communities, oftentimes they're underinsured. They don't really know what insurance to get or what insurance is required. For the larger communities, with the general manager, the super big communities, they might be overinsured. So Is it a case by case scenario? Is it differ between all types of communities, or is there like a set guideline to decide whether or not an HOA is insured, overinsured, or underinsured?
Having done this, for 30 years, over 30 years in my experience within the industry and with my own shop for 22, we don't treat anything as a cookie cutter scenario.
Right.
Everything is handled independently, and you start with the governing documents. The governing documents are the CCNRs, the bylaws, any of the other documents that you have are what tells the association how they're required to operate. So if you don't request those, review those, have a copy of those, especially state of California,
Hmm.
that's what paints the picture for how you have to procure insurance. So when we look at a risk, we're needing financials, the reserve study, the CCNRs, the bylaws, everything of that nature in order to make sure we're doing it the right way. At
Right.
the end of the day, my errors and emissions policy is at risk if I offer you a product that doesn't properly protect you because I didn't do my job.
Right.
And I'm protecting board members who are performing thankless jobs, not getting paid any money to do this and to put themselves at risk to do it. So I better be the best person in the industry in order to provide that protection for them.
Yeah, with that experience, I mean, you know your stuff, you have your own shop, and being in the industry and being so familiar with HOAs as well as insurance for so long, it's kind of I think our viewers would want to know, is there like an example situation that just kind of sticks to your mind? Maybe it was like funny, maybe it was crazy, maybe it was a an extreme event where the right coverage really helped an HOA help the community from a major financial crisis? I know there's
Most of
so many probably, right?
the most of the most of the claim scenarios that we have are unfortunate situations,
Right.
but the proper coverage written in accordance with the documents. I think the one that stands out in California is what we've called the spaghetti claim. It was an individual who fell asleep while trying to clean out a pot of spaghetti, and the spaghetti flowed up over the pot because he left the water running,
Oh,
clogged the drain, and it damaged 10 stories worth of units before they can get into the unit to shut down the water because it was within a high rise in LA.
wow.
And something like that, you'd look at and you'd say, okay, well, you're in a lot of trouble, but without, the water damage coverage, without the proper coverage for the interior of the units in accordance with the CCNRs, you could definitely find the board of directors in a position to be exposed, which is
Hmm.
not where they want to be.
Hmm. The spaghetti claim. I like that. Obviously, 10 stories got affected. It's
Yeah.
serious, but at the same time,
Yeah.
a spaghetti claim.
Well,
That's
it was a 30-story high rise, and 10 of the stories were affected because
wow.
water just finds its way down, as you're
Yeah,
aware,
yeah, yeah.
finds the path of least resistance.
Wow. I shouldn't be laughing, but it is. It is. I have to
You
chuckle.
can't,
I have to chuckle. Anything with
and
spaghetti in
then
it, I.
and it was covered because any sudden or accidental discharge of water
Mhm.
from an item contained within a unit is technically the definition within the ISO format.
Right.
So it's it's a covered scenario. We like to say, and I say it in jest, but there's no stupidity exclusion
Yeah.
for the insurance coverage within an HOA. Everybody signs the same documents to enter into the contract to be part of the community and be a one X amount of the community and take responsibility.
Yeah.
So everybody buys into it. And I'm sure we've all read cover to cover those HOA documents that were given at close of escrow,
Hmm. Hmm.
right? From
Yep.
first line to last line,
Yep.
100%. Yeah.
Yeah. Yeah. 100%.
Yeah. I can't imagine that happens.
That's a good one though. Okay, let's dive deeper into kind of the risk management and really like
Sure.
specifically the claims process. So,
Okay.
as an HOA, like what actual proactive steps can they take to reduce the likelihood of getting an insurance claim?
Sure. I mean, it's a subject that needs to be discussed more
Hmm.
because preventative action is more poignant than after the case, after the
Right.
claim action. Unfortunately, when carriers do their inspections, they offer two different types of advisory aspects. One is um, the word escapes me now. One is mandatory, one is voluntary,
Hmm.
right?
Hmm.
So the mandatory claims is what everybody pays attention to because without performance of those, then the carrier would pull out of offering terms for the association and they would cancel the association midterm.
Yeah.
The voluntary ones are being said, hey, this is what you need to be doing and make sure you're doing on an annual basis, or take care of these issues now
Yeah.
so they don't get any worse. And I mean, that's tree trimming, that's grinding down sidewalks, fixing the curbs, checking your sprinklers to make sure they're not pointed directly at the exterior of a unit, ensuring that proper drainage is in place, slurry
Right.
sealing the streets, checking on oil that's built up, making sure your pool's in accordance with Virginia Graham-Baker Act, um, properly labeling of the pool depths, signage, um, illumination or lighting on
Uh-huh.
anything at night, like everything that you can think of that would be a reason that somebody in today's litigious society would turn around and sue.
Mm.
Anything that you can think of is possible, and
Right.
anybody can sue anyone for any given reason at any given time. So it's the HOAs have a big target on their back right now because of everything that's been taking place throughout the industry, because of the pricing, and because they typically have a deeper pocket than the individual living within.
Yeah. And it's always, HOA is a company, right? An HOA is a corporation, and the liability
Mhm.
are going to go to the board members. And, whether they're voluntary, I mean, all HOA board members are voluntary, but still they take on that risk. I personally think it's a noble thing to do, to be able to step up and, to try to take care of your community. But at the same time, there's liabilities and risks involved, and it's so important to stay safe, but insured, right? It's important to stay
Yeah, I
insured.
mean, absolutely 100% accurate. They are elected officials of their communities.
Right.
There are people that have put their names out there to be on a ballot so they could be selected to take on this duty,
Hmm.
which is lackluster and disadvantageous, but it is something that is a service that needs to be provided for the community and should be commended. I don't think that there's enough accommodation or enough recognition for the individuals who do sit on the boards.
Definitely not. Definitely not. And yeah, I mean, kind of diving in deeper into this topic, if you're a board member, just kind of hearing all this, you're like, oh my God, right? Oh my God, there's so much things to check off, especially like if you're self-managed, especially if you don't have like a manager to kind of, have you walk through the steps as well, like you're just like, oh my God, like freaking out. So, to kind of let's try to minimize that in this podcast. Let's have some positive aspects as well. So,
Got it.
like what type of regular maintenance and documentation can a board member do regularly to really kind of reduce these types of insurance liability risks? Something that they can actually, put their hands on.
I mean, it would be contacting and contracting with individuals that are well versed throughout the industry, people that have been members of trade organizations that contribute their time back to the trade organization. Yes, it's an investment to sit on a committee for a trade organization, but at least I'm trying to better educate the community and our niche market that we exist in.
Yep.
This is not a well-known market. People don't say, oh, yeah, HOA. They don't quite understand it. I mean, I don't know what the percentage is nationwide. That might be an interesting statistic for me to learn later after this. But, finding the vendors that are vetted by the management company that have been put in place and have relationships throughout the industry that know, hey, look, this is not an eye gouging situation. We're not going to price gouge these people. We're not trying to do any of that. We're performing a service so that they can perform their service. And that's kind of how we've treated everything all along. It's just find those vendors that can go through, hey, look, this is what you need to have done within your pool. This is what you need to have done within the streets or the concrete areas. Find the vendors that are well known and understood within the industry because I can go to anybody down the street and find someone to, redo my driveway. But
Yeah.
is my driveway going to crack in another 5 years and change levels and all of a sudden I got to replace it again?
Hmm.
That's not a position that any homeowner or board member wants to be in. So document everything that you can, get bids, get multiple bids. It shouldn't cost much. It does cost time, but it shouldn't cost much money in
Mhm.
order to just receive a bid from a contractor to say, look, I need to know what it's going to cost for me to redo the pool coping or repaint the exterior of the units or change the stucco on the exterior of the units, anything of that nature. All of that deferred maintenance is hugely valuable, but has been really sloughed aside in the last 5 years. As I mean, the economy's gone great, but it seems that the dollar amount that needs to be set aside has not been paid attention to.
Yeah, yeah, absolutely. And I think documentation is so important just to have that evidence, just to have everything on deck. And I think this kind of connects to the next question is, how should a community really handle, either pushback or just outright denial from insurance carriers? Does that happen? And if it does, why does it happen?
It does happen.
Okay.
It's not a good thing. It's not the best thing for the agent, definitely,
Hmm.
unless the agent has been transparent in the process to say, look, this is not covered, this is covered, and we've disclosed it, you've signed off on it. Unfortunately, that doesn't typically happen where agents are completely transparent. There's a lot of hidden stuff historically that has been taking place, but if in the event that the carrier does decide to deny the claim, one of the paths is, first off, you need to have the board and management double check their documents, right? Did we
Right.
sign applications? Who signed the applications? What was listed on the applications? Did it misclassify the association? What was the reason for the denial? Why did the carrier turn around and say, hey, you know what? We're not going to pay this loss. We want out. Enjoy, good luck. I mean, my father in his 40 years of it, he learned his little mantra, not mantra, his little saying was, I empathize with your position. Unfortunately, however, it's simply not covered.
Right.
And that's not a statement that anybody wants to hear. And
Right.
that's not a statement that the agent wants to hear.
Mhm.
I actually recently have heard of an agent who pushed so far back against a carrier that they ended up losing their appointment
Oh,
because they pushed so hard to try to get the coverage for their client. And that's a great position to be in. I will leave them unnamed, but
yeah.
I mean, that's admirable as an agent to push that hard.
Salute to them.
And we've done the same thing, and we've torn apart policies and we've tried to get coverage, but ultimately you've got bad faith claims that you can go back against the carrier. You've got down. Where did I go? See, you skipped questions on me. So
You answered them too
uh,
good. You were answering
uh,
two, three questions that I mean.
uh, yeah, pursuing unfair claims and or bad faith claims against the carrier. Looking, but again, a lot of the stuff is going to be found in the application process or in the proposal, which a proposal, whether people believe it or not, and depending on the avenue, sometimes people view it as a trifold or a resume. Like it's a presentation of what should be covered, but it is not 100% guaranteed what is covered.
Hmm.
And typically within every insurance proposal, there's going to be a disclaimer that says review your terms within your policy for actual coverage definitions.
Yeah.
And in doing that, certain agents that have not been transparent find ways to circumvent that and have agents or I'm sorry, consumers find comfort in buying a product that may not actually even exist.
Yeah.
So there's a lot of stuff within those applications. I mean, agents shouldn't sign the applications. Board members and or community managers should sign it. I know in the state of Nevada, community managers are not allowed to sign it. Board members have to sign it
Mhm.
because it is an admission of behind the scenes characteristics of the property that went into designing the policy through the underwriting process. And if those characteristics are misrepresented, you could have a total misrepresentation of risk
Yeah.
and then have a potential carrier say no about anything and everything. And that's not what anybody wants.
Yeah. Yeah. No, totally
I
agree.
guess I am a little doom and gloom, aren't I? Yeah. Yeah. I'll try to
No,
work on my optimism and
it's good to know now rather
okay.
than a crisis happens and you're just like, oh my God, right? So hopefully our viewers,
Agreed.
understand that, yes, when we're talking about insurance, it's about something bad happens, but if you have insurance, if you have the right one, you're protected and you can sleep at night, right?
100%. That's
That's
the
what it's all
idea.
about. Awesome. And I'm gonna say the three words that everyone talks about all the time that maybe not a lot of people knows. Davis-Stirling Act. So let's talk Davis-Stirling Act. So
Yep.
first of all, like what is it, right? What should the HOAs know about it? And
Mhm.
what really are their implications to maintaining the right insurance?
So the David-Stirling Act was, I want to say it was from 1984,
Hmm.
and where it originated from a loss in Newport Beach area involving a bicycle rider who came around a corner on a street and ran into a vehicle. Vehicle driver didn't see them coming, and obviously the worst case scenario happened.
Hmm.
The lawsuit that ensued exceeded the coverage at payout, the payout exceeded the actual coverage that had been purchased by the association. And when that happened, they said, I don't know, let's just, I mean, I can't pick a number, but what ended up happening was that the dollar amount in excess of the contract or the insurance policy ended up being special assessed to the board members who purchased it severally and personally, not the entire association. So what the Davis-Stirling Act does is it puts in protection for the board members and their actions in accordance with Davis-Stirling Act minimum limits, saying, okay, under a million or under 100 units, I have to carry $2 million in per occurrence liability.
Hmm.
Over 100 units, I have to carry $3 million in per occurrence liability. Now, in today's world, the inflationary aspects of everything that's gone into place, $2 and $3 million is not a lot of money and will not get you far. So there are umbrella and excess liability policies that are in place that can exceed or push up those limits. But essentially, what Davis Sterling does is says if you've procured these minimum limits, and it's important to remember minimum limits at per occurrence basis, not general aggregate basis.
Hmm.
Per occurrence is, as it sounds, any one occurrence. General aggregate means over the course of the policy term. So January 1st to December 31st, if you have two losses of $1 million and you have a $2 million aggregate, you have coverage for both. If you have one loss of $2 million, you're going to exceed the per occurrence, and then that other additional million would be handled elsewhere. But essentially, coming full circle,
Hmm.
Davis Sterling gives the board the ability to be protected from any liability individually if a loss occurs that exceeds the limits carried by the association.
Yeah.
All it means is that in a 100 unit association, instead of the five board members being the ones that have to bear the brunt of the payment of that litigation settlement and indemnification, you end up with all 100 unit owners sharing in it, not
Yeah.
just the five.
Yeah.
So it doesn't exempt the board members from their share as a member of the community, but it does limit their exposure to one portion of the number of units within the community.
Yeah.
And it's only in the event that the loss exceeds the limits provided. So it's a pretty big piece of legislation, and Davis Sterling has gone on to continue to expand on that in a number of different ways in the HOA industry, and they've been a huge, huge rock and cornerstone of the industry.
Yeah. Yeah. And it's important to protect the board members. It really is.
100%.
I mean, it will be too much of a liability for them, in my opinion, right? I mean, and having this act really allows them to not take on all the share and the responsibilities. Um, and I know you kind of touched on inflation, and inflation Obviously, inflation is affecting groceries, it's affecting our day-to-day life, but it's also affecting insurance premiums, right?
Mhm.
And insurance premiums have been increasing. It's been on the rise. So, you know, with these types of market condition changes, especially within the HOA industry, especially with like the rising insurance premiums, how should HOAs navigate that, and how does your firm specifically help your clients navigate these market changes?
You know, throughout the industry, it's always been said that the insurance industry is inflation proof. It is not recession proof,
Hmm.
right? What we're dealing with now is the growth in inflation or in inflammatory aspects of costs of goods and services that go into the reconstruction of the buildings that are being insured.
Right.
The tariff aspect has not even really come into play yet. I've talked to a couple business owners that have said they're seeing it on their invoices as X percentage, and that has bumped up their costs of imports and exports. But when it comes to the goods and services, the precious metals, nickel, copper, gold, palladium, anything that goes into the construction of these new homes, aluminum, and then even consider lumber, where it's being imported from, is going to have a continued impact on the marketplace. As the value of the cost of reconstruction increases, so does the cost of the premium. Just in the same fashion as I'm sure if I asked you, hey, what was your house worth in 2020? And you'd say it's worth X. And
Yeah.
I'd say, what's it worth now? You'd say it's, I don't know, X times 1.5,
Right.
right?
Right.
As that happens, so goes the cost to rebuild that said structure. And in doing so, the premiums go up. I mean, we've seen in my time in the industry, I've seen it on both sides. I've seen the huge recession that we saw 7, 8, 9, 10, when the Great Recession hit and premiums and costs of goods and services were coming down and values of property were coming down and reconstruction costs were coming down and premiums were going from 40 to 30 to 20 year over year over year. And
Right.
in that, when that they do operate hand in hand. Premium, however, is a lagging indicator to fund performance and industry performance.
Yeah.
So when things go up, and we've told our clients since 2020, um, hey, plan for 7 to 12% increase year over year
Right.
for the next 4 to 5 years. And here we are now, and I'm saying 5 to 10% increase. At the same time, I've been telling them, look, whatever your premium is, whatever your maximum that you can increase your dues are set at, do it year over year, every year, max it out. You're not going to be liked by the homeowners, but you're going to be in a better position financially, and you're going to be in a position where you shouldn't have to face a special assessment
Yeah.
simply for the maintenance of the common area.
So
So,
the board should really, start not, I mean, maybe they should have started budgeting a long time ago, but because of the rising insurance premiums over like year by year, they
mhm,
need to take into consideration, their budgeting, right?
mhm. Yep. I mean, the largest expenses typically for HOAs, and correct me if I'm wrong, you've got more knowledge on the other side of the management side, but they are landscaping, insurance,
Yep.
and management company.
Yep. You're absolutely right.
And if I take insurance, which is one of the top three, and I tell you you're going to face 12% and sometimes 25% increases. And then if you're in a brush area in the last 5 years, you may have seen a 300% increase.
Yeah.
There's no way to budget for those type of catastrophic increases and the market changes that have taken place. But if you could say, hey, let's max out our assessments, we don't know what's going to happen, let's do it on a protective basis, you'd be in a preventative scenario, you'd be in a better base or a better place than you would be. I mean, some associations have just said, oh, we've been so fortunate we haven't raised dues in 5 years.
Right.
And I've said, yeah, that's bad.
Yeah.
That's not what you want to
It's not a
be.
good thing.
Right. You're not keeping up with inflation. The money that's sitting at 4% is actually depreciating, even though you're getting 4% on what's sitting in the bank. It's not enough.
Yeah.
So,
Yeah. In this economy, it makes no sense to, if your dues have been same, then something's happening. Something's
right.
happening. Yeah, something is going on.
Agreed.
So definitely to our viewers, if your dues have not changed, please talk to your board, talk to your management company.
Right.
Um, but you know, if you had if boards do have a management company, then a lot of times, the management company would do the insurance reviews and kind of
Sure.
also during the selection process, they would, get different quotes. But, for the self-managed communities out there, and there are a lot of self-managed communities in the US, what would be the best way to really compare the HOA insurance quotes? Especially, the board members are not insurance experts. What should they look out for? How should they compare? What are the best tips and tricks on making the right decision?
Typically in California, it comes down to bottom line.
Mm,
It's, oh, this one was 20% cheaper. Okay. When you're buying a car, are you buying a Porsche? Or are you buying a Volkswagen? One of them will get you to and from where you need to be. One's a little
mhm,
bit flashier, maybe does a little bit more, goes a little faster, acts a little better. The question is, why is it cheaper? It's not necessarily, you shouldn't look at it as it's the cheaper option, so we're going to take it that way we can stay under budget,
mm,
because there are characteristics within there that have the ability to make or break an association's budget. If they say, well, you have the cheapest policy, but your deductible's 50,000, the other one's 5,000. Okay, well, we need to compare those two aspects and figure out how do we make them the same. Or you're insuring us at $20 million, the other agent's insuring us at $40 million. Why is there such a huge discrepancy? Those types of things need to be paid attention to. What we've seen management companies do in the past
mm,
is, I mean, we can do it, other agents can do it. Put together, management company is allowed to put together a comparison
right.
and to say these are the key items of coverage that we need to pay attention to, and send it to the broker and say, please fill this out. Broker fills it out, sends it back. Management company takes all three, compiles them into a spreadsheet.
Yeah.
Now you have line by line comparison with information that matches, instead of some proposals from agents will say, it'll just say building property coverage, $20 million, deductible 5,000. That's it. Then it'll skip to general liability and say liability, 1 million per occurrence, 2 million aggregate. Next line, fidelity bond, 500,000, directors and officers, 1 million. They don't give any coverage information, because when you provide coverage information, you provide exposure for yourself
Mm,
as an agent, that I'm saying, hey, this is what's covered, this is what's not. So the management company can ask their vendors, I need you to put together a list of what you think the most key aspects of coverage are. And then you send them that column in an Excel spreadsheet, you let them enter it. Then you take that column and you throw it into a 3x3 proposal with all three options. You have a better option or a better opportunity. We've had management companies do that in the past.
mm,
And we do it with multiple options that we put together for our clients.
right.
If we have two different carriers competing against each other, I owe it to both carriers to offer those risks, offer the proposals to the risks, or the carrier, or the boards, because that's my relationship. I have a relationship with the client, but I also have relationships with the carriers. At the end of the day, the client makes the decision as to what's best for them, not me.
Yeah. Yeah.
I can advise all day. But at the end of the day, the client's the one that makes a decision, says this is what we want.
Yeah.
If it's the cheapest, it's the cheapest. If it's the most, and we had one association that took a premium that was 50% higher because they said, no, there's too many exclusions in the cheapest option, and we want this one. And we've had other associations that have taken premiums that are 50% lower because they said, okay, we'll just advise our membership that all these exclusions exist and don't do all these things, and we'll be fine.
Right.
That's where board members are elected officials to run, like you said, the corporation,
Hmm.
the not-for-profit organization that an association is, and they get to make the decision at the end of the day with respects to the choice of vendor.
Yeah.
So if any of the homeowners out there don't like some of the vendors, maybe we need more people running for boards. If I'm not mistaken, Neo, I think usually
100%.
it's It's the minimum amount of people that can run for the board is who runs for the board.
Yep.
But
Yep. No, and you're right. At the end of the day, it is the community that makes the better decisions. Hopefully, for any HOA, the folks that you work with are looking out for your best interest. Brian and I certainly are for our clients. And I think kind of leading off of this, I think there are some specific misunderstandings or some, misconceptions about coverage. What are some of the more common ones? And, what are some of these misconceptions that we can really educate the boards on?
I think the most confusing aspect of the property coverage would be where I would go is how homeowners may not know what's included in coverage on the interior of the unit and
Mm,
what's included
right,
on the outside of the unit.
right, right.
So there's three different grades of coverage. There's all in, which basically means what it sounds like. Everything that's permanently mounted on the interior of the unit is covered. Basically, pick up the condo, turn it upside down. Everything that falls out, you insure. Everything that remains within there is insured by the association's policy.
Mm,
That's the best. That's the Bentley of the insurance policies because even people's upgrades that have been done to the interior of the units, their granite countertops, their marble countertops, travertine floors, anything else that they've done, any kind of custom paintwork or um, crown molding, anything of value that's been permanently affixed to the interior of the unit is covered.
right.
So there's also what's called original specifications, which means when it passed the unit sold to the original owner from developer, only those items that were available from the developer are what's covered.
Um,
And that's a difficult position to be in because who knows what was original and what wasn't, unless you have the sales brochures or developers list of upgrades that you could have placed in the interior of the unit.
yeah,
But at the same time, it still provides coverage for the interior of the units, just only to the level of whatever the original specifications were.
right.
The next issue would be bare walls, meaning nothing's covered on the interior of the unit. You are drywall with mud and tape and floorboards or concrete slab. There's no baseboards, no cabinetry, no countertops, no crown molding, no lighting fixtures, toilet fixtures, anything else on the interior of the unit. So, it's really important to know what's covered when you talk to your insurance broker, your individual insurance broker, because you don't need to be, if you're in a bare walls association, then yes, you need every ounce of coverage for building and your HO6 policy as a condominium
Mm,
on the interior of the units. But if you're in an all-in policy, you may be able to step that down a little bit and purchase a couple, deductibles worth of coverage, 100,000, 50,000, something like that. But again, I mean, comes full circle and goes all the way back to it's the coverage for the association is already predetermined in the CCNRs,
yeah, right,
what they're required to purchase.
right, right. Yeah, no, 100%. Brian, I think those questions you really answered them perfectly, and hopefully to our viewers, the homeowners, the board members, you're able to be a little bit more educated on the topic of insurance. Now we're going to talk more about BBIS. We're going to talk more about Brian Berg Insurance Services. So now's the time to market yourself, tell our
Uh,
viewers kind of, your specific approach to insurance placement, right? Like your bread and butter, how does it kind of differ? What would you say are your advantages compared to some of the more traditional brokers? And what really sets you apart?
so I think growing up in the industry and learning from the ground up, having done the claims, the grunt work, the certs, the property inspections, having started at ground zero and learned how to build up from there. I think it was a huge base for teaching me what it really took. I mean, when you're younger, you look at what your parents have done for a living and you go, "Oh, that's not exciting or that's boring or that's what this is." I mean, listen, every high school or college party I was at, what are you going to do? Oh, I'm going to be an insurance broker. And then everybody turned and left, you know. There was no more conversation about it. So I look at that and it just became something for me that I had a good upbringing. I had a great base with my father and my mother who were around. My dad coached me when I was playing football or baseball or soccer. My mom was always there to shuttle us around. Everybody was available, and it was an ideal situation, one could say. And I wanted to be able to give that to my kids. So I looked at this, and at the same time, everything you do is not about, it's not easy. Everything, anything worthwhile is not easy.
Of course.
So I adopted when I was in high school. I keep telling my daughter who plays softball at Colgate University up in upstate New York, and I gave her actually, I think it's in the back here. No, it's in the office over here. I gave her a painting or a picture of the mantra, which is if you're not working, someone somewhere is. And when you meet them, they will win.
Yeah.
And I gave it to her, and she's like, yeah, I'm not putting that up on my wall, Dad. She goes, every time I talk to you, you tell me anyways. So, I mean, one of the things that has always set us aside is our willingness to do whatever it takes to get things done in the fashion that our client wants it done.
Yeah.
I'm not going to do everything one way. That's not customer service. So I try to do everything in a custom fashion for anybody and everybody that we do business with. And that means reviewing the CCNRs, reviewing the financials, reviewing the reserve study, taking the time to be in a position to say, I know what product I'm putting out there. And I know I can stand by the words that are written within the proposal. It's all in, it's walls in, it's bare walls, it's a single family home community. It's not insured properly in accordance with Davis-Stirling, that I can make those points. And then, you know, it's just a constant grind, you know,
Yeah.
living off of being the first one in the office, being the last one to leave.
Yeah. I
And
respect that
you
so
know,
much. I'm definitely the first one in the office. I don't know if I'm the last one to leave though.
so you're a morning person, is what you're
I am a
telling me.
morning person.
Yeah.
I love my
Okay.
coffee. No, but Brian, that's great. And
Yeah.
just by talking to you, having the conversation, your like willingness to really just like teach folks about, what you're good at, right? It's what you're
Mhm.
good at. It's what you've been doing, it's what your family has been doing. And I
Okay.
think a lot of respect to that. But Brian Berg, thank you for being here. It was great having you here. And if you have any last words for our homeowners before we end the podcast.
Ask your agent. If you don't know, ask your agent.
Ask your
And
agent.
if you're a community manager and you don't know, ask your agent. Have them attend a meeting, whether it be via Zoom or whether it be in person. Have them attend a meeting. Once you've done that, they're the ones educating, and that takes a lot of the exposure off the management company, and it puts it back on the individual who should know what they're doing.
Yeah. You heard it here, folks. Ask your agents. All right, Brian. Hey, thank you so much for being here today. And to our viewers, thank you so much for tuning in to HOA Simplified Podcast yet again with Brian Berg from Brian Berg Insurance Services.
Absolutely a pleasure. Thank you very much, Neil.
Thank you.